Welcome to Financial Jojo. My name is Josh, and this is the market update. Please hit that like and subscribe button to get the latest in the market moving news. Let's take a look at the S&P 500. It did close in correction. Since the beginning of the year, we're looking at that 10% down. Of course, let's cover this. So a correction is going to be 10%. Bear is going to be 20%. Anything lower than that is going to be a crash. So we had the Dow Jones down 1.42%, S&P down was 1.01%, NASDAQ was down 1.23%, and the Russell was down 1.45%. And if we had been looking at the futures over the weekend, and of course the U.S. stock market was closed on Monday, President's Day, yesterday, we had Monday, open yesterday. The futures were 3% down, so it made a nice little recovery at the end of the day, and the VIX had spiked up about 3.82%. All right, so we see that the S&P was officially in correction territory. This is the first time in 2 years, and of course, you see it everywhere. It's all over the news. The Russia-Ukraine conflict escalates. Of course, President Putin had sent in troops. That looks like an invasion to me, if you ask anybody else, they're going to say exactly the same thing. And we had President Biden say that the U.S. will impose sanctions, which they already had a long list. I saw them post. I don't have that in front of me right now. But President Biden said that they had already begun an invasion of Ukraine, and they had sweeping sanctions on the Russian bank and its military bank. These also had the Russian sovereignty debt covered in that. I had read reports on other leaders, of course, imposing sanctions on Russia. Let's see. But what I wanted to cover was that the Russia-Ukraine conflict, of course, is a huge worry and everybody's watching it, but it's not the biggest threat that we're seeing in the stock market in the U.S. So JP Morgan, let me pull it up here. So the Russian-Ukraine tension is a low earnings risk for U.S. corporations, but an energy price shock amid an aggressive central bank pivot focused on inflation could further dampen investor sentiment and growth outlook. So the Feds are really going to have to tiptoe around raising interest rates. So investors are already on edge, and they're wrestling with the tensions in Moscow, which they're worried about being a full-blown war. Wall Street is wrangling with the surge of inflation. So the Federal Reserve needs to raise the rates to get inflation in control, and investors are worried about that. We have the growing Russian-Ukraine tensions, which is also putting more fear, uncertainty, and doubt into the market. You know what you need to do? Take a breath. We're in this together. If you look, every time we have this fear, market drops. Let's see, right here. There's a 16% drop. What did the market do? Comes back. COVID, big drop, 31%. Comes roaring right back. Right here. Correction. What is the market going to do in the long term? It's going to come right back. So we're going to dollar cost average through this. Take a breath. We're looking at this day to day. It looks rough. It's very rough. I'm here to be a long-term investor. I hope you are. Get rich together. I'm not looking at month. I'm not looking at 6 months. I'm not looking at the year to date. I'm not looking at the year. I'm looking at this. I'm looking at the 5 year. I'm looking at this max. Look at it. That's what I want. I'm looking for massive returns on my investments. I'm investing in value companies. I'm looking at the growth companies that have potential. I have my conviction plays, and I'm sticking with it. I'm going to dollar cost average through this. It's going to lower my cost. In the long run, I am going to have bags of money, and you should too. So let's jump back in this. So in this article, we had the Neil Shearing, which is the group chief economist for Capital Economics Estimating, Worst case scenario, they're seeing oil prices to rise to $120 a barrel. They were just nearing 100. I totally see it getting over 100. I don't know how far over that it will go, but that does give us a great opportunity if we want to look at some energy stocks. I had pulled up just a few. So Shell, Chevron, ExxonMobil, ConocoPhillips. Of course, these are big names, big games here. I got it pulled up on TipRanks. I love this website. So let's take a look at these 4 stocks, potential upsides. Of course, they're all strong buys. We're seeing them posting huge gains for the year. Let's look at this. Okay, let's pull up Shell first. All right, so what I'm looking for, and the way that I always look at stocks, is the PE ratio. So this one's a little overvalued in my opinion. I like to see 20 or less just compare it to the market. But the analyst, so currently it's at 52.67. We have 5 analysts here. They're seeing a potential price target at 61.54. So that's a 16.84% potential upside. And that's over the next 12 months. I do see the Russian-Ukraine tensions causing all these stocks to pop because they're going to be making extra money. You're going to see dividends grow in these stocks if they have dividends. So the energy sector has been just a great buy. I do own some oil-related stocks that have been doing fantastic with all this. All right, so jump into the next stock, Chevron. All right. So on TipRanks, they have this as outperform, strong buy, bloggers, everybody's wanting this. So let's see what the top analysts have to say about that. We have 16 ratings here, strong buy, price target of 141.54 with a 6.9% potential upside. Let's jump into it. Let's see where that PE was. So a little bit better PE. I'm liking that. Like I said, anything less than 20. I like to investigate the company a little bit more, see why their, profit to earnings ratio is there. Put it more in a value territory that I like to throw my money into. All right. So that was Chevron. Let's look at ExxonMobil here. All right, so once again, the analysts have this as a moderate buy. The news is bullish as far as bloggers' opinions go. And the news sentiment is also bullish. So let's take a look at their PE. Once again, in the 14.3 ratio here. Let's see what the analysts have to say for ExxonMobil. So they're seeing a price target of $84.28 with a 10% potential upside with 18 ratings here as a moderate buy over the next 12 months. And then the last one that we were looking at is the ConocoPhillips. They have a current price target of $105.20. So that's a 19.78% potential upside over the next 12 months. And we have a strong buy with 15 analysts. So let's jump into that. And they have, once again, a 14.8 PE ratio. And while I'm here, okay, so it does look like they have a 2.54% dividend, which is always good. Always nice to get paid for holding your stocks. And just so we can go and jump through here, I'm sorry here. So ExxonMobil had a 4.52% dividend rate. Chevron had a 4.08% dividend rate. And Shell had a 2.98% dividend. Love all of these companies, and you're going to see a whole bunch of dividends being increased this year. This is a way that companies can pay back their shareholders, because especially these oil and energy companies, they're going to be raking in cash during all these hikes, during all of this fear and uncertainty and doubt in the market. They're going to be making money. It's going to be fantastic for them. So that's going to be the sector that I'm looking at. And then I feel the shift later in the year will be into financials. So if you haven't already gotten into regional banks or insurance stocks, those are going to be really great later in the year. Once again, looking at these energy stocks, that's what I'm going to be buying into. All right, thanks for joining me today. Don't forget to click the Moo link down below. Get up to 5 free stocks, plus get a free share of Lucid when you use my link and you trade or deposit $100 or more. And I also have my Gemini link down there. When you trade $100 worth, you can get $10 in free Bitcoin. I got that link below. And also that Gemini dollar, that 8.05% interest for staking. Awesome. Love it. That's what I'm doing over there. Like I said, you guys have a great day. Thank you.